Hello everyone and welcome back to Forex Scope. I'm your host, and today we're diving deep into the exciting world of GBP JPY. We'll be analyzing this dynamic pair on both the 15-minute and 1-minute timeframes to uncover potential trading opportunities and forecast future price movements. Before we jump into the charts and share our actionable buy or sell signals, if you're looking for insightful Forex analysis and valuable trading insights, make sure to hit that subscribe button and turn on notifications so you don't miss out on any of our future videos. Let's get started. This resistance zone is identified based on a significant price rejection observed around the 202.069 level. The data shows a notable decrease in price after reaching a high of 202.085 and then encountering selling pressure that pushed it down to 201.872. This peak price and subsequent decline suggest a strong area where sellers have historically entered the market, preventing further upward movement. The candles within this timeframe exhibit considerable downward wicks, indicating that buyers attempted to push prices higher but were ultimately overwhelmed. The clustering of trading activity just below this high also points to a potential ceiling. The distance from this resistance to the identified support level meets the minimum 1.5% requirement, ensuring distinct trading zones. The price action clearly shows a struggle to break through this upper boundary. This support zone is established by observing a clear price floor formed around the 200.989 level. The historical data indicates that after falling to a low of 200.954, the price found buying interest and bounced back up, creating a level where demand consistently stepped in. The presence of significant upward wicks on the candles around this price point signifies that sellers tried to push prices lower, but buyers successfully defended this territory. The formation of multiple price touches and a period of consolidation just above this low suggests that this area has been a reliable turning point in the past. The considerable distance to the identified resistance zone ensures these levels are independent and provide clear trading boundaries. The repeated testing of this price range without a decisive breakout to the downside highlights its significance as a strong support. This support zone is identified based on multiple price interactions and a period of consolidation within the range of 201.86 to 201.89. Observing the price action, we can see several candles failing to break decisively below the 201.86 level, indicating buying pressure emerging in this area. Specifically, the period between timestamp 176.255, 1360 and 176.255, 1780 shows prices oscillating within this band, with the low of 201.845 and high of 201.89 occurring during this time. The repeated testing of the lower boundary and subsequent bounces suggest that this price level has acted as a floor, where buyers have stepped in multiple times to prevent further declines. The presence of smaller candles with rejections at the lower end of this range further reinforces the notion of this being a significant area of demand. The consolidation phase indicates indecision between buyers and sellers, but the repeated inability of sellers to push the price significantly lower points to the strength of this support. This zone represents a critical level where a balance of power is maintained, potentially leading to a rebound if prices revisit this area. The lack of a strong downward trend through this zone implies accumulation or at least a pause in selling pressure. This resistance zone is identified by a significant cluster of price action and multiple rejections occurring above the 202.017 level, with a notable upper bound around 202.069. The period between timestamp 176.254, 4160 and 176.254, 4700 shows prices consistently struggling to break higher, with the high price reaching 202.057 and the low within this consolidation phase dipping to 201.893. This price area has acted as a ceiling, where selling pressure has been strong enough to push the price back down on multiple occasions. The presence of relatively large bearish candles or significant upper wicks within this range suggests that sellers are actively defending this level. The sideways movement or accumulation observed around these prices indicates that supply is meeting demand, and the inability of the price to sustain a breakout above this zone highlights the dominance of sellers. This resistance is a key level where traders may have placed sell orders or where existing short positions might be holding, creating a barrier to upward price movement. The repeated failure to hold prices above this level signifies a lack of buying conviction and the presence of strong overhead pressure. The sustained struggle to move higher from this area points to a significant concentration of supply that is preventing further price appreciation. Based on the provided data, the GBP JPY 1-minute chart exhibits a complex interplay of support and resistance. The current price is 201.956, near the previous resistance level of 202.069. The recent price action shows a slight pullback after touching this resistance, suggesting potential for a short-term downward movement. However, the identified support at 201.86 to 201.89 remains strong, as evidenced by previous price reactions. The Fibonacci levels suggest a pivot point around 201.899 to 201.956. Given the price is currently at the upper end of this Fibonacci range and has touched resistance, a retracement is likely. We anticipate a move down towards the middle of the Fibonacci range, potentially testing the support zone around 201.89. Subsequent price action will depend on whether this support holds. If it does, we might see a bounce back towards higher levels, possibly retesting the resistance. If the support breaks, a more significant downtrend could ensue. The tick volume is currently moderate, indicating some trading activity but not extreme volatility. The Bollinger Bands show the price is near the upper band, which could imply overextension and a potential reversion to the mean. The interplay between the strong support, recent resistance, and Fibonacci levels creates a volatile but potentially predictable path. We expect the price to fluctuate between these key levels as market participants react to the interplay of supply and demand. The voiceover narrative for YouTube could highlight the battle between buyers and sellers around these critical price points, emphasizing the importance of the identified support and resistance zones for short-term trading decisions and the potential for a zigzag price movement as the market digests new information. The underlying trend remains somewhat neutral with a slight bias towards consolidation given the proximity to both support and resistance. The recent uptick in volume near the resistance might signal increased selling pressure.